Happy middle August, everyone. It's the dog days of summer. It's hot, it's sticky, and most people are at the beach, which is what they should be doing. But we wanted to give you a quick update on the stock market because we feel we're at an inflection point real soon here, and investors that may have been very scared of their account values back at the end of June may want to be paying extra close attention to where the markets are now. So first, let me share with you what we're seeing here in the market. It's been a little while since we've given you a update. We have been enjoying our time in the summertime here, folks, hitting the beach, spending time with family. But that doesn't mean we haven't been paying attention to what the hell is going on in markets. We've been paying close attention, and that's why I want to give you this update right now. So let me share the screen from the beginning, take it back in time. You'll notice in the top right corner, June 16th, we did our last client and VIP event the end of June. We talked a little bit about where the market was. If you've been following us, then you know we've been pretty dead on since January. In February, we called out that there was a recession coming and a bear market. What the hell is going on with my screen here, folks? There it isn't. And since then, that's exactly what's happened. We've had a declining market and a bunch of people talking about is recession around. We just had 2 quarters of GDP, negative GDP. So technically that is a recession. Although the powers to be right now would like to redefine what recession is. Isn't that convenient as you go into the midterm elections? So back in June 16th, end of June, we talked about these 5-wave patterns. We felt that the market was just ending one of the first macro waves, and we were anticipating that towards the end of June and through July, we might get what's called a bear market rally. Since then, what's happened? Well, guess what, folks? We have this decline that you see here, and then right afterward, we've had a nice bear market rally. We've had that end of that macro wave 1. We're probably coming to the end of this wave 2. Now, here's the thing. A lot of the news has been saying, oh, bear market rally, 4,200, 4,200. Too many people have been saying that for my liking. I mean, the one thing I've learned about markets is if everybody's thinking one thing's going to happen, that's probably not going to happen. So at the end of June, when everybody was bearish and scared, we came out, we said we expect a bounce. That's what we're seeing. Now everybody's come out and said bear market rally, 4,200. If the market wants to create maximum frustration, which is what it's supposed to do, I think the market squeezes a little bit higher here, maybe gets into 4,400. If it wants to cause a lot of frustration and get people bulled up, maybe 45, 4,600 even. So right here is one of those times where now we got to watch the market day by day and start to look for signs that this rally could fail, because if it does, then the bear market pattern would expect another 5-wave structure lower. And as we shared back in June, where that may lead us is to this one big macro 5 waves. It's 2 5-wave patterns put together, but they'll end up looking like one big one on a longer time scale. And we think the market's headed down into that low 3,000 area, maybe even as low as 2,800, only because there's a lot of convergence there. There's a lot of convergence in the charts. There's a lot of things happening there. That's also where there's a long-term trend line that you could call reversion to the mean. And that's what markets like to do. When they get bullish like they did last year and earlier this year and get far away from the average mean, they got to pull back to it. So that's why we're thinking that that should be a target zone. Maybe we get there by September, October. And that's when investors should start thinking to themselves, what do I do next? So if you're an investor out there and at the end of June, you were panicked when you looked at your statements and you decided, I'm not looking at them for the next couple months. Well, this is where you want to pay attention, because if you were scared of your account statements at the end of June, if we're right within these chart patterns, then over the next handful of days through here, the middle of August, might be your last chance to readjust your portfolio risk. Because if we're right, that's a big if. I mean, we're not predicting this is going to happen, but so far our patterns have been pretty good. So if that's the case, if you were scared at the end of June and you've been thinking to yourself, maybe I need to get a little more conservative, you're in the window of time where you should be having those conversations and starting to put some action plans in place. If you're somebody who's been sitting in cash and you're looking for that time to put that cash to work, now is not the time to do that. Wait a few more weeks. There's a lot of reasons for this. Read our newsletters, listen to our future videos. We will let you know when we're back in the market making purchases for our clients. We're not doing that right now, folks. So just know when the time is right, we'll let you know. However, if you've been sitting on cash, you want to start putting together an action plan. What are you looking to invest in? Where are you going to start? There's going to be a lot of great opportunities coming up, and you need to be prepared because markets bottom a lot faster than they top. If you're somebody who has a long time horizon, you've got a lot of profit in your accounts, and this volatility isn't affecting you one bit mentally, then don't worry about it. Use the weakness in this market to add to positions, build greater portions of the portfolio, if you're that long-term minded and you can handle the risk. If you have a unique situation that's outside of those things, then contact us. We'll be happy to give you free advice. At this particular moment, it's more important that people keep the money they have and they keep themselves safe than it is for us to think about profits or competition. So if you need help, don't hesitate. Reach out to myself, Justin, or Patrick Moorhead. We'll be happy to give you our opinion on what we see is happening and give you some advice on what you could do in your situation. Stay tuned for our upcoming newsletters. We'll have a lot more going on as far as charts in the dollar, in interest rates, the dollar. And until next time, folks, enjoy the summer weather. Have a last hurrah with your family.